Back to the Mike Rosehart Show. We're live again for another week, another live episode. And today I just want to say that it was a nice little recovery day, and I continue to remain short. I think we're getting into a period in real estate where there are beginning to be some really attractive buying opportunities. So I promised you guys I'd tell you guys when I thought it was time to start buying. If you've got a large portfolio and you want to start dollar cost averaging in, I think now is the time to start in real estate. Coming into Q1 2023, we are going into buying season. So if you can get liquid now, you should do that. If you've got GICs, you can cash out, bonds. If you've got, equity you can tap into, you can borrow right now still at 5, 6, 7% and get really great spreads on some really fantastic flip opportunities, some great buy and hold stuff. So in real estate, we're starting to see opportunity. And so I wouldn't say go all in, but I would say start buying the dip. And in stocks, I think we just had, you guys saw last week, we had that rally with CPI. I would hold off on going long on stocks for now. Same with crypto. My personal opinion, I would hold off. I think we have more pain to come into Q1. We could get a nice Santa Claus rally where we see another 10% upside, in which case, if you have some longs, this is the time to sell into that, right? When the market's getting overbought, that's when you want to sell into it, right? If you still have properties right now, again, not a terrible time to sell. We haven't hit the bottom yet. We're getting close to it. On that ride down, though, sometimes you can negotiate really great deals because there's no one else at the table. So on the ride down in real estate, even though you might not be at the bottom of the real estate, trough, so to speak. And when we look at data, guys, let's anchor on data. 2008 real estate crash, right? One of the worst in the United States. They didn't hit the bottom for average real estate prices until 2011. Took almost 2.5 years. So we will see the bottom, I think, on real estate prices. Everything lags probably into next year. That doesn't mean, though, that you can't buy deals at a great valuation and still sell those at a great valuation. Again, because the data is lagging, you can use old comps to sell for great prices. In many cases, you can also use the stagnation of the market to your advantage to negotiate some really great vendor financing deals or negotiate really great terms. So this is becoming a buyer's market, which is great in real estate. I've got a few things under contract right now that I'm super excited about. I have a really big deal in Florida that I'm really excited about too. It's a 24 unit. I'm really excited about that one, right almost on the beach next to like some really high-end stuff. So I'm excited about that property and a few other ones that we're locking up as well. So if you guys are interested in Florida and you don't want to do the management, I have now purchased and partnered up with some guys to now own in-house property management for Airbnb specifically only. And if you have a property in the Burlington, GTA area, London, Sarnia, Barrie, or potentially in like West Palm Beach, Miami, anywhere along the East Coast, Palm Coast, St. Augustine, all the way down, we are looking to expand there as well. So if you have properties in the GTA area that are nicely renovated, we may rent them from you or manage them for you. Primarily, we're doing rent to re-rent. So we take the unit, we pay market rent, we stage it, make it nice, and we make a profit on that by running it through various platforms like Airbnb. So I am doing that. It's something I'm expanding in. It's an area that I think makes a lot of sense. It's an area that logistically for my current business is synergetic and will allow me to grow as we continue to find properties off market, will allow us to service those because it's very hard to find good outsourced management. You oftentimes need to hire in-house to control the process and ensure the quality at a reasonable cost. So yeah. Hey guys, how you doing? Stickman Finance is buying a property in the spring. David, good to see you on too. Mr. Roser, what do you think about AQN? Time to buy long. So the challenge with AQN, Algonquin Utilities, I think it's Algonquin Power, is a utility company, and they're Canadian based. And overall, I like that they pay a nice healthy 8% dividend, but it's not sustainable at these rates. They are heavily exposed to interest rate adjustments. So as the rates have creeped up, it has cut into their bottom line and they're not very profitable right now. They're growing top line revenue, which is great, taking on new projects. How sustainable is that dividend, right? So that's something I would think about if I was investing in that. I do have, full disclosure, I own a position in AQN. It's not a huge position. It's a small position relative to my portfolio. I will continue to hold it. There might be a bounce on that stock in the next little while, and I would look to take some of my profits. I'll continue to wheel that stock. So I will sell calls until my calls are covered away. Over a couple of years with the dividend and that, I should be able to recoup my cost. Again, selling covered calls on your existing equity position allows you to lower your cost base over time. And the worst case scenario is you limit your upside, which is fine. I'm most concerned about not losing money. Another reason why I love real estate is like it's really hard to lose money if you're good at what you do. Like if you buy properties at 70 cents on the dollar and that's the thing that you do, and you renovate smartly and you manage costs effectively, when you buy quality, you don't lose. Your chance of a loss is very low. You might lose all the profit. You might have been forecasting $100,000 profit, and now you're looking at break even, but it's hard to lose money. Whereas in crypto, I was just looking at a stat on Instagram the other day. Follow me at Mike Rosehart if you're interested. Yeah, I post there all the time. And I shared this on my stories a few days ago. If you had bought Bitcoin about a year ago, today you'd have about 20% of what you had in it. So if you had $1 million in Bitcoin, it's worth about 200,000 right now. That's the reality. And I'm a fool. I think I bought a full Bitcoin at the peak. Like I was dollar cost averaging the whole time, but I was doing it all the way up and all the way down. And now I'm fully deployed. And if you're one of the people who, like I have my taste for crypto. I've got enough of my net worth in crypto. It's a few percent of my net worth in crypto. I'm not like one of those crazy guys who got 20, 30% of their net worth in crypto. No. I'm like, for me, it's always been an asset class that's very small that I think has a lot of potential. It's like tech stocks. Again, another area that I think there's a lot of potential for future growth. It's been beat up hard this year. So you've been holding tech stocks, you've been holding, high growth stocks, you've been holding crypto. You're getting punished right now, but just be long-term focused, right? Don't sell at the bottom. Hold and be diversified. Don't hold everything in Bitcoin. Don't hold, everything in one stock, right? You got to spread it around the whole indexes and buy a little piece of everything. And some of the some of the tokens are going to go to nothing, and some of them are going to go 100x over the next 5 years. So there is definitely a place for decentralized currency. The blockchain technology is the future. It will have a use case. It will continue to have some inherent value. It's being hit for a number of reasons, but anyway, yeah. Let's go to the Q&A for a sec, and I'll circle back. The next question was Port City Trading Desk says, "Hey Mike, hope you and your family are doing well." I am doing well. I have a bit of a cold right now, unfortunately. My family's been sick all week, and I've been fighting to keep myself not sick. I'm like, hey, I'm not sick. I'm mentally telling myself I'm not sick. I'm popping the vitamin C, the vitamin D, the probiotics, the enzymes, the oregano oil extra strength. I got the propolis going. I've got I got everything. I got the 10 herbal remedies lined up. I'm hitting everything, but the overdose vitamin C, everything really to keep my immune system up and strong. And then last night I stayed up way too late, to 3:30 in the morning. And I woke up this morning and I felt like shit. And I'm like, no. And I got a little tickle in my throat. You can hear it. I had successfully for the last 8 days watched my entire family be deathly sick and taking care of 3 young kids while they coughed in my face and avoided it with herbs and good sleep and a great diet. And then I slept up last night and I watched Yellowstone is what I was watching. Great show, by the way. Yeah. Back to the Q&A. So you said next question was 15 unit, original price 1.35, over ask 6 months buyer reduced to 1.1. Would an 800K offer be insulting? I mean, yes, probably that is a lowball insulting offer, but in this market, you can get away with insulting offers. In Florida, I've been throwing out 10, 20 offers a week, and majority of them, they're coming back saying I'm insulting them. And it's funny because now ones I was throwing out 2 months ago are calling us back and being like, actually, you know what? We might take your offer if you can come up 5%. And I was offering 30, 40% under asking, and people are considering it, right? So never too crazy, but 15 units for that price is fantastic. In any high demand quality area, you're typically paying $200,000 a unit, right? So unless it's rural or some smaller town, maybe you can get 100K a unit or less is fantastic. I think that almost anywhere you can rent an apartment for $1,000 a month, right? There's almost nowhere in a developed nation that I can think of where you can rent for less than $1,000 a month, right? Unless it's super rural or no one wants to live there. But $1,000 a month means 1% rule at $100,000 a unit, right? So as a rule of thumb, it's interesting. Just as an observation, Daytona Beach, relatively, hopping place, you can find stuff for $100,000 a unit there in large multifamily. But then you go down to Miami and you're $250,000 a unit. It's crazy how the crazy variance as you go down the coast, the difference in price, and the rents aren't that far off. It's just you're paying for that location premium, right? The further south you go in Florida, there, the warmer it is. Miami's almost never cold. Whereas like Daytona Beach has some really cold days where it's like close to freezing cold. You got like coat on, pants, like you're freezing. And you just don't get that in like South Miami. So just the difference, I guess, climate probably plays at least a part in population and, wealth distribution, demographics, all that. Good evening. How you doing, Jawad? Aiden says, hey, Mike, just wanted to quickly say thanks for coming online every week despite the busy schedule to drop us knowledge on us. Thanks, Aiden. I appreciate that. And thank you for tuning in, by the way. For all the guys who are tuning in and girls who are tuning in to watch the show, I appreciate you. If you're watching the playback, again, I appreciate you. The only thing I ask is hit a like button. Throw in a comment once in a while, say hi. Someday, if you ever have the capital and you're like, hey, I know this Mike Rosehart guy. He's been posting for 5-6 years. I want to partner with this guy because I've seen him speak for hundreds of hours. I know how committed he is to showing up. That's part of why I do it too, is like, I can say that. How many people can say that every week without fail, whether when I had COVID, I did it on Christmas Day, sick as a dog, whatever it is, I'm consistent every week from 7 to 8 p.m. ish. It flows. Sometimes we get on at 7:10, sometimes we go till 8:20. We try to be 7 to 8 p.m. Sometimes we go a little late. But every week, consistently, I'm live for the show, right? And that's something that I think, that's something that's important if you want to build credibility, and to show people that don't know you who you are, is show up. Always show up. Be a man of your word, right? Be a woman of your word. So it's part of the moral compass and just the philosophy that I ascribe to. So Joseph says, hi, Mike. Hope you've been having a good week. Would you ever in the future invest in hotels with your real estate expertise? What could be pros and cons with that sort of investment in business? Yeah, Joseph, I think it's a natural evolution to get into the bigger multifamily stuff and eventually hotels. I've already wholesaled something earlier this year that was a 25-unit boutique hotel on the water in Florida. So I signed that deal. I was going to take it down, but I made a profit to assign it. And their partner's taking it up, and I helped fund actually the deal a little bit too. So I was involved on the financing side as well a little bit, only a tiny bit. And now I've got a couple things that I'm working on LawCamp right now as well that are apartment buildings that could be played out as boutique, hotel. There is definitely a desire to do that. I think my long-term vision, if you guys have been following me over the channel over the time, has been that, I think there's a piece, and I couldn't believe how, by the way, I just want to stop and say, when I mentioned that I was interested in doing a mentorship type program where I picked like 5 or 10 people and, I charged some sort of money, maybe as a deposit, I don't know, to show that they're serious. And then we partnered up on deals where I coached them through that with weekly calls and et cetera, so forth. Couldn't believe how many people responded. I had like 20 emails, people sending me emails. So if you're interested in that, it's rosehartcoaching@gmail.com. I think is the email that I'm set up for that. But anyway, it's something that I'm going to do. It's a plug and play, an add-on that I think is both fulfilling and highly profitable and a great way to scale. Like if I had an army of people, that understood how I do what I do, then imagine the amount of ground we could cover if we had a team of people that knew my process and how I think and how I operate. And so they would be people, and I've now talked to a lender as well who's like willing to fund our flip projects, if anything we do. So it's like if I get financing lined up for a majority of it, like you say, 75% loan to value, and we could set up like a fund of sorts where the students are doing a lot of the legwork, and I get to partner up and I get to mentor and train people, and it's fulfilling for me. I get to grow without having to do all the dirty work, right? The students can learn by doing the dirty work, right? Simple things like, getting out there and calling 50 realtors in a month, right? And talking to all of them, asking them about pocket listings and telling them exactly what you're looking for. And then following up, staying, sorry guys, and staying fresh top of mind, right? Calling wholesalers, just all of that stuff leads to huge amount of fruit. It bears a lot of fruit. So that's a piece. And then getting back to the hotel thing, for me, my ideal lifestyle would be, headquartered in the Bahamas. You have to spend 90 days a year to have tax residency there. The reason for that is just to stop the paperwork mess. You no longer have to file personal tax returns. The Bahamas has no filing requirement at all. Nothing. You don't even file. Not only do you pay no tax, like not only is there no income tax, capital gains tax, inheritance tax, all that. Not only is there none of that, but there's like, you don't even file a return personally. and then you can set up corporations, around the world, maybe Bahamas, wherever, and then bleed, income back to a parent company that rents the IP. So if I had a bunch of IP courses or something or videos, then I could, funnel profit into that shell and be really tax efficient. So going back to the hotel strategy, imagine 3 months a year in the Bahamas, 4 or 5 months a year in Florida, because you're 60 miles away. You're talking like 30 minutes by flight. It's like a suburb. West Palm Beach, Miami, all that, the whole area is like a suburb of Bahamas, right? If you pick Freeport as an example, which is a duty-free island that has no property taxes, as an interesting aside. They have zero property taxes. So you can own property and pay nothing. Some of them have land leases and stuff, but most of it's property tax free. So that's kind of cool. And so I think being there and then living, I love my summers in Canada. So I think I'll always spend 4 months a year, 5 months a year, maybe 4 months a year in Canada during the warm weather where it's beautiful on the lakes here. It's fantastic. I love Canada for that reason. And to visit family too. I'd have to always come back to Canada to see my family and my friends. And so I think that's probably my end state. And I think a really efficient way to set up a lifestyle by design business is to do mentorship type, what do you call them? Like retreats, I guess, like, sort of events you could put on where we could gather like sort of our own tribe of people who think like us, who are also investors like you guys who follow me, right? The 1,000, 2,000 people that watch the stream every week, my local like core network in every area. And we could have cool networking events that give you write off. So you can have like a bunch of fun and write the whole thing off. As well as like people who are paying to attend a ticket. If the ticket costs exactly what it cost for the resort to have a fun for a week, then they get to write it off their vacation because they're doing it as a networking mastermind. Everyone gets to write it off. So that's a win-win. And then if you can get it so that, if I had a resort as an example, and there was one unit that was vacant, it's like, if you stay in that unit, then my living costs come down. So it's cost control too, to have various units that you can stay in if they're vacant, as well. So strategic for a number of reasons. And then also something to do. Like if I had hotels in Florida, Bahamas, maybe Costa Rica for a second passport, and Canada, maybe some resorts, some cabins, whatever, then you have businesses in all those places. When you're traveling there and it's a business write-off to travel there. And then when you're staying there, you maybe can stay for free, or you get to write off. So it's very synergetic to the lifestyle I want to lead. And I want something to do when I'm there too. So it's just all lines up. So yes, I will definitely get into the space. I continue to invest in that. And that was part of why we invested in luxury stay, or I invested in luxury stays with 2 other operating partners, because I want that luxury, the luxury stay type of business. I think it's a huge underserved market and people aren't doing it well. And so if we could do it well, then we can have a competitive advantage. It's a synergetic business with what I'm already doing. And so, yeah. Next question. Oh, cool. I got a super chat. Hey, Port City. Thank you. Really appreciate that. $2.79 Canadian super chat. Not much, but a double on me. I appreciate that. It does mean something, like it's nice when someone gets you a coffee or, buys you a smoothie or whatever. I've had enough of those through the years on YouTube, and I don't monetize any of these live streams. I probably could turn it on again where like at the start of the video, there's one ad. And that was start making me, I get a penny a view. So like, that'd be like $10 right there off the hop, just putting one ad in at the start of the video every week, $10-20 for my live stream. And then however long that video is evergreen for, it continues to generate a penny every time someone sees the ad. I have ads all turned off because again, it's not really about the money for me, but it would be more sustainable to do that. I should do that. I could invest in better equipment and better things and put the money back into the channel in certain ways. But yeah, I think that like some sort of educational mentorship piece, some sort of mastermind event thing, retreats around the world, that would be cool. That'd be fun. So for me, that would just be something that I'm interested in. Am I interested enough to do it right now? I don't know. There are a lot of deals I want to take down, only so much time. And I have very small windows for each of the activities and businesses that I'm doing. It's part of why I'm currently looking at bringing on a full-time nanny, because then like / personal assistant / aid to our family, to me, it's really about freeing up time and enjoying the life that we want to live and, growing, because it feels good to grow. It doesn't feel good to stagnate. So it's nice to continue to grow, even if you're growing a little bit. It feels really horrible to go down. Trust me, everyone who's been investing through this year knows how much pain is involved in loss, right? Yeah. Hey, Mike, hope you're having a good week. Pros and cons. So the last part of that, Joseph, was pros and cons. So cons are that depends how short term you go. If you did weekly stays or monthly stays, furnished rentals, that's less work. But if you're at an active hotel, you need front desk staff. You need like cleaners. It's a business, right? So I would say it's probably better to go somewhere in the middle, like want to set up like a medium term rental business where you're doing weekly stays or lesser turnover. It makes it easier for you. So that's a piece of it. There's more money in the shorter term stuff, but it depends is the answer, I guess, sort of. It depends on a number of factors. What works for you? Pros, more money. Cons, more work. A more complicated business structure. You need to rely on more staff, which means you need good systems and good people. But if you have those things, then not the end of the world. All right. Alex says, good evening, Mike. What a wonderful topic. Yes, I thought, there's actually an opportunity to buy here, and a lot of people are fearful. I'm also selling, by the way, still. I have flips that I'm finishing that I'm selling. I have a couple of properties that I've been renovating for like a year now that are more long-term buy and holds, and I'm going to dispose of those too. People are saying, hey, Mike, why are you disposing at the bottom? And it's like, true. Like, it would have been much better if I disposed of them earlier this year. But here we are, and I have to make a decision of what is the best return on that capital. And refinancing the property isn't really an option right now. And given where rates are, it doesn't make sense. And then when I run the numbers, I'm like, would I buy this property for what I could currently sell it for? And the answer is no. So I have to sell it. That's just been a metric for me. Like, that's my check and balance, my gut check. Like, when a property's done and I look at it after and I look at comparables and I'm like, I could sell this property for X amount of dollars. I wouldn't buy it for that. There's a profit. So if there's a profit, then you could sell it. And so still selling, still buying more, starting to nibble in and then buy the dip. I haven't bought the dip on my stock portfolio yet. I'm still short the market. I'm not super short the market. I'm hedging. I was short the market out of the CPI reading. I was short the market, fully short the market. And so I felt the inverse of that 9% rip we had on the NASDAQ. I went 9% down. So I was beating the NASDAQ all year, and I've traced 18% off the NASDAQ and gone neutral again, waiting to see what to do. So yeah, here I am. Elias Johnson, appreciate you. Hey man, appreciate that. The $10, means something. It allows me to keep ads off the channel, I don't have any ads at all on this. You'll notice there's just nothing. So appreciate the support, guys. It means a lot. Elias says, just want to echo what Aiden said. Thanks for always showing up and providing so much value. I appreciate that. It means a lot, guys. Even when I'm not feeling well, like today my throat is killing me, but I'm trying to push through. Any questions you guys have, of course, always try to give my most transparent and honest answer. I try to remove bias. In fact, like, I'm heavily biased towards real estate, right? I have an inherent bias that I want it to go up. I make the most money when it goes up. But you'll see a lot of my videos are talking about how it's going down and how I'm saying sell and don't buy, right? Because I'm trying to counteract my bias. And I'm like, hey, if I'm looking independently at this, would I go all in right now? The market conditions are not fantastic. I think it's better to buy a little now, buy one property now, buy another property in January. I'll buy a little bit more in February, March, April. Conditions could, one possibility, none of us know the future, right? So one thing I do know is if you buy now, 10 years from now, you'll be thankful you did, because inflation will carry the price of real estate up over time in a big way. And there's also immigration trends. Like, Canada's taking in 500,000 people a year. We're growing like crazy, and there's nowhere near that much new housing being built. And it's hard to build new housing. So yeah, there are a lot of things working against housing affordability and working for us as real estate investors. Could it get worse over the next year? Yeah, we could be fighting inflation for another year. All we need is one bad CPI report, guys, and we're at another 20% down rip on the stock market, and then the following year, the wealth effect leads to another 10-20% drop in real estate. That could happen. We could also have, several banger inflation reports and, rates start coming down again into next year. I don't think it's going to happen right away, but maybe by 2024, rates are coming back down. As soon as that's happening, there's a lot of people are trying to buy the dip because they're thinking, I'll buy the dip, I'll be finished my renovation, my rehab, in order to refinance the property when rates are down. So people will start buying. As soon as rates come back down, people will all that cash on the sidelines will pour in. Whatever cash is left, a lot of trillions wiped out in this recession so far. I don't think it's over yet. I could be wrong though. Again, that's why I'm still buying properties. Because if I'm wrong, I'd rather still have some real estate. If I'm right, no big deal. I have some real estate. It's cash flow positive. I'm not looking to sell in the next year. If I hold it for 5 years, if I buy and flip stuff that is cash flow positive, I'm all good. Right? I can hold that for 5 or 10 years. No big deal. That's what you should be doing, is building a sustainable business model when you're going into buying property. Don't go buy new builds that don't cash flow, fully on speculation, right? Don't be buying property that doesn't make sense, that you can't carry, that doesn't self-service, doesn't work at 10% interest, doesn't work at 11% interest. The answer is no, then that property is no good. You don't want to own property in cash. Real estate is not attractive in cash. It just isn't. So yeah, there's that. What happened last week? So my house, I got reappraised and I got a great appraisal, came out on this estate, and so I'm really excited about that. Yeah. It's been up. Okay, next question was from William. Hey Mike, I listened to an old podcast with you and Gabe. Both the video and the webcast were terrific. I highly recommend it to anyone seeking FI. Thanks. Wow, Gabe's a great guy. He came all the way to London, Ontario in Canada. And this was back when Gabe had only a couple thousand subscribers. He's a great videographer, I guess you'd call it, videographer. He's good at editing and he's great at shooting. And he reached out and we had a little race on subscribers, and I think he ended up probably ended up blowing me out of the water. I haven't checked recently how he's doing, but I love his stuff on Frugality. At the time, my time wasn't as valuable as it is today, and my wealth wasn't near as much as it is today. And so at the time, Frugality made a lot of sense. If you make less than 100 grand a year, Frugality makes a hell of a lot of sense. If your time isn't worth $50 an hour, it's worth it to stand in line at the grocery store and price match and save $50, because $50 in 1 hour is pretty good. That's tax-free. $50 tax-free is like making like $70, $80 pre-tax. And so it's worth it to go, coupon, clip, whatever. It's harder for me to subscribe. Just my mindset's shifted because of how my time has shifted in value and how my wealth has shifted in value. And my time is better spent optimizing my portfolio and growing than it is pinching pennies in the way that it used to be, right? What got me to where I am now is not the same thing that, will get me to the next stage. So I had to have a mentality shift, and we all have various stages we have to go through. Some people, I think pretty much everyone has to subscribe to Frugality. Even guys like Grant Cardone who say like a dollar saved is just a dollar. He says it all the time. He's known for like not giving a shit about cost base. I used to not understand that. Like that to me was like, what? Like, how can you have no regard for cost control? Again, that will not lead well in a recession. Cost control is important for any business. I think you should run your personal life a lot like a business. And that's something that's alien or weird. And it definitely was 10 years ago when I was out there writing blog posts on 25andfree.com. And I was writing posts about how, how I saved my first million pretty much by just like scrimping and investing everything. And I was investing it in high return, vehicles through real estate. I was able to use leverage to make a 25% return on a property burr, but I'm levered 5 to 1. Then all of a sudden it's not 20%, it's 120%. Or 100%, triple digit return. And so you do that sustainably for a number of years. And you're like, wow, if I can save an extra $10,000 by not going on a vacation, that $10,000 becomes $50,000, becomes $250,000. And over a lifetime, it's millions. So small sacrifices at 18 years old, 19 years old, 20 years old, 22, 25, all those sacrifices I made. I'm now, by the way, I'm in my 30s now, sadly. So I turned 30. So I'm no longer in my 20s. Very sad about that. I thought I would accomplish more, no. When I was in my early 20s, I set a goal to have like $5 million or something when I was 29, and I blew past that. So like, in a lot of ways, I crushed a lot of my initial goals. I think my initial goal was like $1 million by 24, and I blew that out of the water too, right? So I did achieve a lot of the goals that I had set for myself, and I did early retire 6 years ago now. I haven't had a job in 6 years. Best thing I ever did was leaving my full-time consulting job. Again, I made like 3-4 times what I made an annual salary in the first few months doing a few real estate projects. So it was the best thing I ever did. But those 3 years were foundational because I needed that day job to lever up and buy a bunch of properties, right? For like Scotiabank and Bank of Montreal and all the banks that gave me a lot of mortgages, I wouldn't have been able to get 12 mortgages in my personal name without us having jobs, right? So it was a necessary step. And Frugality is important, I think, in the early stages. Everyone subscribes to Frugality to a degree. Like even Grant Cardone, if he's making $50 million a year, he's only spending $2 million on his lifestyle. He's still saving like 95% of what he's making, right? His business is reinvesting into itself. And so he's saving and he's investing back into his business. Saving and investing are almost synonymous. Like if you can save money, well, obviously you're going to invest it. Like no one just, unless you're stupid, I guess you just keep it in cash. One caveat. It's not stupid this year. If January 1st this year, I just kept all my savings in cash and not invested in crypto miners, the stock market, tech stocks, all of that, even real estate, your money was safer in cash than it was in real estate during this dip. It was the only time in history where we saw bonds get the worst they've been crushed in a century, right? Like it just obliterated. If you had a portfolio that, and I've been screaming from the mountaintops, that was 60% equity, 40% bonds. There, I'm back in. Can you guys hear me? Lost the audio? Someone added me on WhatsApp and tried to call me. Someone I don't know who they even are. Tried to WhatsApp me. So I just closed out WhatsApp and blocked them. So yeah, I don't know why I had notifications coming through from that app. Like I didn't know who this person was. This is a problem with having your number out there, I try to hide it, but sometimes people find it. The WhatsApp number too, weird. Are you in Canada or the US? Ree asks. So thankfully we're back in. Awesome. So I'm in Canada, but I spend my winters in the US. So I go and snowbird is what I currently do. And so, yeah, I invest in Florida and I invest in Canada currently, in Ontario specifically. Port City says, prices 2 times in 10 years in regards to real estate. It's a likely possibility. Yeah, we for sure could see, like I'm seeing some properties in not amazing areas of London, but like C, B tier type properties, bungalows selling, like they're older bungalows, but like, again, you're getting a detached house with land, everything in London, Ontario, for like 300 grand again. On wholesalers are peddling stuff. I'm starting to see on MLS pop up the odd deal here and there. That's 2020 pricing. So that's erasing all of the 50% gain that we had in real estate. And the thing is, the cost of materials is not like it was in 2020. The cost of drywall is 40% higher. The cost of a contractor to build something today is much higher. What I'm alluding to is that cost base to build, replacement cost, is gone up significantly and prices have fallen to the point where some properties are trading up below replacement cost. And so if I can buy a property for less than I could build it for and the land is free, that's a screaming buy to me in the long term, right? I think that long term we should see real estate trade at above replacement cost. So there are definitely opportunities right now to start buying. Even in London, Ontario, where I was saying it was overvalued, we're starting to see pockets where there's value. And so that's a good signal. I think for the next 10 years, we will see as immigration of 500,000 people a year flood in. And we have plenty of immigrants here in London. So what will happen is when you immigrate here and you have family in like London, or you come here for Fanshawe College or for Western, we're, again, London, Ontario, the biggest student mecca in Canada. We have the most students. I think 26% of the population is student. So yeah, the biggest college and the biggest university in Canada, both in London, Ontario. So yeah, that's good for immigration. I think London will get a lot of those immigrants. And we, on top of that, London's really shitty to deal with from a municipality perspective. It seems there's a lot of this not in my backyard stuff where neighbors frequently call on you. Like I have lots of friends telling me, hey, they're calling like bylaw enforcement that they rent out their basement. And like we banned Airbnb in London, again, because they're a not in my backyard city. They don't want Airbnbs on property. That's a signal of a bad city, right? That's a city that doesn't want affordable housing. They don't want a lot of units to be built. They are hard to deal with. Just everyone I've talked to who's dealt with stuff here, it takes years to get through everything here. So there are some good city staff I've dealt with, and I've had a lot of great success with a few individuals, but there are also some bad apples, right? And just procedurally speaking, they're slow to respond, right? And it's not their fault. They're overworked, and government employees don't like to put in long days. I don't feel like the city's open. They're off on every holiday. It's like the school system, right? The government employees don't want to put in their 60 hours a week, and they want to be off every holiday that they can. So anyway, I don't want to harp on the city, but my point is, could be better, and it's hard to build. And this is just across most of the cities in Ontario that are not small. All the rural towns are like, you get a permit in 2 days. They're like, go build it, please. But in London, it's like you got to do your zoning and site plan and hum and ha. You submit a building permit, and like all the draftsmen and engineering firms that I talked to are like, London's the worst, man. Like they've submitted stuff all around London, and the plans examiners in London come back with a deficiency on a typo. It's like, oh, you put 2 R's in this word. It's like, wait, you're gonna give me a 25-day delay on my building permit and not respond to me for 2 weeks, and then come back and get a limited amount of time? Because by the way, when they respond back with the deficiency on the drawing to the engineering firm, they get as long as they want to respond to the counter. So anyway, they know how to play the game. To drag permits out can take months. It's maybe better now than it was, but there was a point during the pandemic where it was really bad. And so I don't have time for any of that. And so I just, that's one of the challenges for London, that will lead to not enough housing. We're taking a lot of people in, and they're not building enough. So the value of the inventory is going to increase. So over 10 years, I for sure could see a double. I think that's totally possible. Could get worse before it gets better, but for sure, I think over a 10-year period, buying now, no problem. Especially if you're talking about buying below replacement cost. Don't go buy $1 million new build. That's stupid. Buy something that's rougher, that needs some fixing, that's below replacement cost. Tiff says, if a dual citizen opens a TFSA in Canada and trades or gains, I don't know the answer to this. Whether it's CSE, securities, I don't know the answer to that. You have to talk to an accountant. The tax-free savings account in general for Canadian citizens is designed to be a place that you can put $6,500. It's scaled every year, the amount. Between 1 year it was $10,000, $5,000, $6,000, now it's $6,500 for the new year coming up, where you can put into this tax-free savings account. It adds up to about a 80 or 100 grand most people would have in their tax-free savings account. My tax-free savings account is worth half because I invested in crypto at the top. And so it went up in value and then down. So I've permanently lost that. I can't write that off at all because those losses in my tax-free savings account, again, I'm holding for the long term, and 10 years from now, I'll be really happy with my crypto holdings, I'm sure. Right now, not so much. But yes, I would say that the tax-free savings account is a beautiful vehicle. Over a lifetime, you can sock away with compounding interest, and if you maxed out your contributions every year, by retirement, you should have $500,000 or $1 million in your tax-free savings account. And then you could go and lend that out if you wanted to. You can lend out of your tax-free savings account doing private mortgages. You could hold Canadian securities in there, whatever you want. The tax-free savings account is designed to be an investment account. Most people open a TFSA at a bank and get 2% interest. It's like, it's not a savings account. It's a way for you to invest. It's a vehicle for you to invest where all the investment inside of that is completely exempt from tax, both the loss and the gain. So if you bought crypto now, your TFSA and it 5-bangered, means it went 5 times from 100,000 to 500,000, that's all tax free. And now if you wanted to lend that out, say $500,000 at 12% interest, you could make $5,000 a month out of your TFSA in interest income, totally tax free. Whereas otherwise interest income would have been at 50% tax. So that's a huge vehicle for the average Canadian. You should be maxing that out, and you should definitely be, I think it's smartest to do private lending with it. Or mortgage lending with it, go through a third-party arm like Olympia Trust, because you can compound consistent positive gains. That's the best way. And it's tax efficient. It's the most tax efficient to earn interest income inside your TFSA. Because again, capital gains are already half tax-free. Interest income is fully taxable. So you want to get the shittiest treated taxable income into your TFSA. Because again, it's tax-free. So to maximize your TFSA, lending. Don't be like me. Do as I say, not as I do. I should do as I say. Hey, how you doing, Hungarian Experiment? Peter, how you doing? Okay, the audio saved. There we go, cool. Everyone's saying they lost the audio. Sorry about that. What do you think of a lot of home builders trading for under 5 PE? I think a challenge is right now, and this is another challenge, by the way, to boosting real estate prices for existing property. It's expensive to build right now. Build costs are high, supply chain issues are still there, labor costs are all-time highs, material inputs very high, building permit and development fees really high in most municipalities, like higher than they were 2, 3 years ago, significantly. We're talking like in some cases six-figure difference, depending on how big the project is. So it's definitely something that is concerning. Many developers and builders will go under. You got to remember that builders are highly sensitive to interest rates. They borrow to buy the land, then they have to carry that land, and then their major input cost on the carrying side is the cost of debt. And so the cost of debt on that land is in many cases like used to be 4%, 5%. Now we're talking 10% easily for commercial loans. So their total cost of interest is doubled. And real estate's falling, by the way. And in a falling market, it's hard to sell a new build house when you've got 3 other houses that are 5 years old on the street that are selling at 20% loss. And so these builders are taking huge losses. And that's why they're trading at low PE ratios. The ones that are solid, that will continue to operate, that aren't going to go under, you'll make a great return on them into the next bull cycle, right? So there can be opportunity to buy these businesses, but be careful. It's like the crypto industry as well, like FTX and their whole blow up scandal with SBF, Sam Bankman-Fried. I've been following that intently, watching all the stuff on it, and I watched him rise and I watched it fall, and you got to be careful. Leverage is a dangerous thing, and being ethical is, I think, paramount. But people sometimes don't have checks and balances in place. Maybe they have good intentions, but they take bad risks. And so, again, I've always been proponents of having reserve cash, don't over lever, careful. Losing money is the worst thing possible. You do not want to lose. If you get to early retirement, the most important thing is don't lose money. It's Warren Buffett's #1 rule. So have a stop loss in your stock portfolio. Sell covered calls on it to protect yourself. You got to protect that downside. That's the most important thing you can possibly do right now, guys, is protecting against major losses. In real estate, there are ways to stop loss too, right? You can force sale the property at a certain point. Or, because real estate debt isn't callable, you don't have to worry about that if you buy cash flowing properties. You're not speculating on Toronto condos or Vancouver condos. You're not doing new build properties that have no cash flow, that are cash flow negative. You're not buying garbage 4-cap properties at 7% cost of debt. And you don't own properties in cash. I think people say it's one of the #1, I guess, like counterpoints that I get is like, well, I'm investing in real estate in cash, so I'm safe. I'm like, are you safe? You buy $1 million house and it goes down 25%, you just lost $250,000. You're not safe. And by the way, what is the cap rate on most real estate in most good areas? It's like 6, 7. So you're getting a 6 or 7% return. Real estate is underperforming bonds right now. Bonds are actually interesting for the first time ever. Some of the bond yields are getting to like 7, 8%. That's interesting. I think what's more interesting is lending against real estate at like 10% or 12% with zero risk. You can lend 50% loan to value against houses. And I know brokers are calling me right now being like, hey, would you lend against this guy's house 50% loan to value? Like a Toronto house worth $2 million, let's say. It was worth $3 million. Now it's worth $2 million. It's already gone down a third. It can't go down that much more, right? The build costs are, there's only so much more it can go down. You lend $1 million on that. So the owner of the property has $1 million to lose before you lose $1. That means the real estate market has to fall another 50%. It won't, by the way. There's a bottom. There's a certain sticky bottom. And the rip up we had has now corrected, right? If you look at the chart of real estate prices in Ontario, it was like this, 2020, and then right back down to where we are now. So we lost 2 years of appreciation. It feels like a lot, but like, how much more can we go, right? Lending, you can make 10, 12% risk-free returns. Mortgage lending, I think, is a very attractive business. I'm very interested in it. People want me to fund deals. I'm a little expensive, but for a flipper product, it can make sense. If you're going through an A-lender bank right now, your breakout fees, if you're to flip a product and refinance again, you're better to go to a short-term product than a long-term product because the bank's going to nail you on lender fees, breakout fees, 3-4 months interest penalty, et cetera, so forth, right? Breaking out of these terms is expensive. It's actually, if you're buying a property to BRRRR or you're buying a property to flip, you're better off borrowing from someone like me at 12% interest or 15% interest or some high amount security against the property than you are getting a bank mortgage at 6.5% right now. I just explained that the total cost over a 6-month period is lower in many cases. And not only lower, but like your time investment too. If you do a few flips at the bank, you're gonna burn your connection. You burn a bunch of mortgages, they don't like that. They lend at low rates and they want you to keep the mortgage open for 5, 10, 20 years. They take a huge loss setting up a mortgage. The origination fees to set up a mortgage with the A-lender bank are high. So the banks don't like it when you do that. So you're gonna burn your bridges too. Save your A-lender, your connection with your A-lender for after you're done. If you're gonna hold the property, you bring that mortgage on after to bring someone like me out, to buy me out. I'm only designed for 4 to 6 months. If your total cost of interest is like 3% on the project, let's say it's 12% loan, so percent a month, you get the whole project done in 3-4 months. And there's some banks that don't have a seasoning period, so you can go back and refinance quicker. You go take me out. I make 3-4%. I'm happy. You pay 3-4%. That's nothing. If you bought the property for 70 cents on the dollar, do you care about 3-4%? You have tons of margin. You can afford to pay 3-4%. And in many cases, it's cheaper to pay that type of option, and it's easier too. Way easier. You make a call, and I check the property out, and I lend. Right? Like, what's your credit? You have some savings. What's the property look like? Mostly, you're interested in the underlying asset, and that's where people go wrong. Is they don't fact check the asset well enough. And so, yeah, I think this year specifically, it's an amazing market to be in because you're getting those great yields right now. And you can do it almost risk-free. Whereas if you're doing private mortgage lending last year, you really needed to be careful because we're going into the biggest peak we'd ever seen. It was like a 30% rip up. And you're like, wow, that's not sustainable. Like, prices of housing we're increasing 3, 4, 5% a month. That's not sustainable. That's the writing's on the wall. So back then I was like doing 60% loan to value because I'm thinking, hey, things are going to crash. And that's so you don't lose money, right? It's the most important thing. Okay, I'm going to go quick with these questions. Do you think private lending with a MIC is still safe? 65% loan to value first. Corey, yes. I think it's more safe now than it was. Be careful, though, looking at how the MIC has structured their loans. So when did they put those loans out? Ideally, you discount the book values they have. So if they say the property's worth 200,000, I would expect the property's worth 170, right? Take some discounts off that. And so be careful. Some mix got aggressive and were chasing rate, but were not stringent on the valuation process. You gotta remember, appraisers are only human. I appraised my house here and it appraised the two appraisals 1.5 and 2.55 within a week of each other, 2 weeks of each other. That's how subjective it is. That's a 73% difference. I've had appraisals where there's 100% difference. I had an appraiser once come back at 300, another one come back at 550, and I sold the property for 575. That's how, like, that appraiser at 300 was so conservative and so wrong. They should have lost their license. They don't. They're bank approved, a big company. I don't want to speak ill of people, but appraisers make mistakes. They're human, and they make mistakes often. And so, always get a second appraisal. But yeah, just be careful, guys, and make sure I understand in the market that I lend in, I understand the properties, and I could take them back and sell them myself if I had to. So for me, that's how I manage risk. And I can keep it at near zero and get a great return. And that type of yield compounded takes me to billionaire at some point, right? So for me, it's just about not losing money. That's where I fucked up this year with crypto and made some mistakes with tech. It's okay, it's gonna come back. But again, risk management, super important. I lost sight of that in many ways. So what do you think about NNN deals? So triple net. Can make sense. Even commercial deals can make sense. I find that the yields aren't as high. A lot of the institutional money has chased yield. Industrial and even just office space is trending down. People are working from home more than ever. So I think there's just going to be less and less need of that as the metaverse takes over and we start working together in the metaverse. I also think that there's a huge play for converting commercial stuff to residential. So there is a play there, but I don't know. I'm just not bullish on the commercial space. It's not an area that I've meddled a ton in. I've negotiated a lease before. I haven't done a ton of it. A little bit. I dipped my feet in, but it's not an area I have expertise in because the numbers weren't attractive to me. Property tax rates are really high. Commercial financing rates are really high. They're premium compared to residential. It isn't as sustainable, I think, long term, and it's difficult to find a good anchor tenant. So. Do you know of any comparable private lending like Olympia in the US? Also, if tax-free account limit is high. Oh, there's tons of them, by the way. Just type in like third-party mortgage broker. Just call a couple of mortgage brokers, to be honest, and ask them who they use to syndicate through retirement accounts. I guarantee the US market is way bigger than Canada. I guarantee there's people that are doing this. So I'm sure you could figure it out by talking to a few brokers. You find an experienced broker who does this, who originates these loans. Like a broker gets an application in and the person says has 10 properties on the go. And they're like, that's high risk, bank won't lend them. And it's weird because like the richer you are, you think the more qualified you'd be. But the bank sees it's like, if you have a job, that's safe. You know, like, oh, you can lose your job tomorrow, but like we're okay to lend to you as long as you have a job. But oh no, you're rich and you have lots of properties and lots of assets. We don't care. We prefer no assets, almost no assets, and a job that you could lose tomorrow. But then we feel good about that. It's like, what? Makes no sense. No fucking sense at all, the way the lending system is designed for A lenders. Anyway, those people get kicked off to B lenders. Sometimes B lenders don't want to fund the deal for whatever reason, and they get kicked off to a private lender. And so the broker who tried to get you the A and the B, they now call someone like me and they say, hey, got a situation, guy's closing in like 8 days. Can you save him? He doesn't get sued. It's a huge deposit and it's a great deal. I'm gonna send it over to you. They're a strong client. Here's all the information. I look at it. I'm like, okay, I'm going to go this amount loan to value. Here's the rate I'm going to charge. And I save the day. And they don't get sued. And they're able to close. And they make a huge profit. They make 150 grand. And they share 20 or 30% of that profit with me in some cases through the interest rates and the fees that I charge them. And so it's a win-win because I'm funding their deal. They're winning because they didn't get sued and they got to close on the deal. Otherwise, they wouldn't have been able to close. And it's a win-win all around. And if you can do that through your TFSA or RRSP, through your retirement accounts, then it's tax-free as well. That's amazing, right? Like that's what you want to be doing. So I think that's an underserved area. I don't think I can throw these questions. I gotta put my daughter to bed. When you look at low PE public companies, do you think there's no way I can replicate the business for as cheap as you could just buy the shares? Como, almost always I find that large companies are not trading at good enough discounts. The reason the PE is low typically is because it's trending down, not sustainable at those levels into the future. That's why the market is discounted because they're thinking about future PE, forward-looking PE. It's very rare that you'll see companies, big public companies, not have been arbitraged and bought. There's usually a reason. Most of the value in the arbitrage space of buying businesses is buying it privately, where you're not competing against public funds. But occasionally, there are like OTC, small cap type companies that you can buy that are underappreciated or oversold. And so, yeah, there's those opportunities. And someday I'd love to get involved in something like that. But you gotta have big pants, big balls. Can you offer some tips for hiring contractors, how to know fair price for the reno and how to keep them on track? Do you buy any materials or it depends is the answer. So you gotta have someone who's good at managing the bottom line, manage everything. And that's important. And then from a cost control perspective, you could bake it in, have the contractor quote it all out. You could supply material. It's a mixed bag. Sometimes I supply material. It depends. If I can get someone to go do it, yeah. I gotta go, guys. Airlines, I don't follow. They're oversold or overbought right now. So I don't know. I think we could see another pandemic rally, I guess you'd call it, like a lockdown or something. That would kill them. I don't know. They've got limited capacity and a lot of demand right now. And so they're making a lot of profit. Do you think of Airbnb on ski hills? Can be great. People love to ski. They love to travel. It's seasonal, but could be good. Depends. Someone bought a house in Vancouver. That's amazing. They got such a great discount. Estate sale, motivated. That's awesome. That's fantastic, John. Congrats. When buying US stock, do you know a trick called Norbert's Gamble to convert CAD to USD and pay fewer conversion fees? Yeah, so the Norbert's Gambit is, I think, my understanding of the way you're explaining is when you journal shares. Journaling shares is the process of you buy a company that's trading on the US exchange, and then you journal the shares over to the Canadian exchange. The problem is sometimes the difference between the same company trading on two different exchanges is just, sometimes it's more than just the currency difference. So it can work out in your favor. It might not. It takes a couple of days to journal. You can also just go on like IBKR, Interactive Brokers, and almost buy the currency at like spot. Like they charge you such a small markup. I would never use the bank ever. They charge like 3-4% markup. I use Monex occasionally, business account with them, and they add like 1/10 of a basis point or 2/10 of a basis point to the spot price. And you can also buy hedges. So if I'm doing a deal in 90 days, I would buy a hedge for that deal in case the price of the currency fluctuates. So I now have an option contract to buy the currency at today's price, plus a small premium to ensure that. And then if my deal's closing in say 4 months from now, I don't have to worry about any currency fluctuation. So that's what I would do if I was doing deals like you buying companies or buying properties. I would just hedge that risk. Some people just take the risk. I think hedging is probably a smart bet in case markets run away from you 10% and now you're stuck putting 10% more down. All right, guys, I got to go. It's been a great hour. Really appreciate everyone. I'm past 8 o'clock. Got to put my kids to bed. Thank you for watching. The secret to unlocking a wealth through you is to spend less, earn more, and maximize returns in the difference. Also, on the Canadian real estate channel, Matt McKeever's channel, I guess he renamed it. They're all still doing their weekly stream after mine, so check it out. We're trying to, I think, have a symbiotic relationship where we both are, promoting each other and whatnot. So when you go over there, and their stream is starting now, probably already did start, just go over and say Mike Rosehart sent me over. So that'd be cool, just to show them some love. So, all right, everyone, we'll see y'all next week. Spend less, earn more, maximize returns. 3 levers.